What's going on, everyone? Dane the Mortgage Guy here, and I wanted to put this video out and address something that a lot of people have been talking about lately, especially with the economy where it's at right now and the housing market becoming where it's going right now. And there's just a lot of people out there, specifically people that just don't really understand the full situation, which I get. It's a very, very confusing situation. But there's a lot of people out there that are like, oh, this is just a 2008 or a 2009 happening again. And you know, we're going through another financial crisis and it's 2009 all over again. I'm here to tell you that it is not 2009 all over again. For those of you that don't remember what happened in 2009, or actually starting in 07 actually, and happening in 08, bleeding into 09, back then there was a thing called subprime mortgages, and they became incredibly popular. Long story short about them, if you had a pulse, you could get a mortgage. It's simple as that. There were a lot of investors and a lot of banks that were saying, here's these really predatory type loans that's going to get somebody who works at McDonald's into a $3 million home, and they're only going to have to pay $300 a month for XYZ period. And they're going to be able to have this multi-million-dollar mansion on the water. Well, that was because they were only paying like a very, very small portion of the percentage rate. And at a certain point, a balloon payment was going to be required. And at that point, when that point did happen, which was in 2008, essentially, nobody can make those payments. So what happened? What did that cause? Well, basically, majority of the country could not afford to make the mortgage payment. And it wasn't because that they got laid off or because they got, they couldn't afford it based off of their income. They couldn't afford it because they could have never afforded it in the first place. If you work for $15 an hour, there is absolutely no reason or logical sense of why or how you could afford a multi-million-dollar property. Like that's just obvious, right? So because all of that happened, 2009, financial crisis of 2009 happened. All these banks had to get bailed out because they couldn't make their payments. They couldn't get the money from the people that they loaned money to for their mortgages to be able to pay the money back to the banks. And the banks ended up failing because they just ran out of money. And that's really what 2009 was. Now, 2020, the coronavirus, this whole situation that's happening right now, what is going on and how is this different? Well, I'll tell you one thing. Right now, the economy going underwater is not because of mortgages. Thank God I am not a part of the reason why our economy is in the tank. But what I can tell you right now is that mortgages are definitely a lot more specific in what it is that they want and criteria to be able to get a loan in these times. Now, back in 2008, 2007, like I said earlier, if you had a pulse, you could get a mortgage. Like, I was 21 at the time, and I probably would have qualified for a $1.5 million mortgage because that's just the type of programs that they had back then. I mean, obviously it's a little bit of a gross exaggeration, but for the most part, like, it was very, very easy time. Well, because of that, the government, after that all happened, the government and the Federal Housing Agency basically said, you know what? That was a little too lax, and we're gonna put some regulations in place that's gonna prevent these kinds of things from happening, and that now mortgage loan officers and mortgage lenders and mortgage brokers are now going to have to disclose everything that we do, and every fee, every dollar amount, every transaction. There is nothing us mortgage lenders can hide from you, the consumer, because there are way too many laws in place to be able to do that, which is good. It's just a great thing. It's an awesome thing that this got put into place. So now it's a lot harder to get a mortgage in comparison to 2008. Right now, still a very, very great time to buy a home and to get a mortgage and to refinance if you do qualify per the new rules that have come out, which I will do another video on next week. So back in 2008, 2009, when all that happened, housing prices went down the drain, right? Because what it boiled down to was supply and demand. There was so much more supply than there was demand back then that the value of that supply, of that commodity, became pretty much nothing, right? And that's why a lot of people were able to capitalize on that opportunity and get houses for such a low price and get investment properties for such a low price, because they were in a position to be able to do that. They were in a position to capitalize on that opportunity. Well, right now, the supply is still not as good as it was, as we would like it to be, as a lot of real estate agents would like it to be. And the demand is still very, very, very strong. People still want to buy homes. People still need places to live. I was watching a live feed this morning of a lot of the industry leaders in the mortgage and real estate markets talking about the situation that's going on right now, talking about the economy and where the housing market is and where mortgages are and where mortgage-backed securities are at. And it's a lot of mumbo jumbo to people like you that probably don't really care as much as I do, because I mean, this is my career, so I kind of have to care, and I do want to care. But they talked a lot about the fact that while, yes, 30% of Americans are unemployed right now, which sucks, like it's terrible, and that's just unfortunate for everyone essentially, there's still 70% of people out there that are employed and still need a place to live and still have the means to be able to afford a place to live. Right now, those people, that 70% are what's keeping this market afloat, this economy afloat, because those 70% of people are still realizing that, hey, I still need a bigger home to accommodate my growing family. Hey, I still need to downsize from this giant house because all my kids have left and it's just me and my wife now. There's a lot of people out there that still need to be able to find those things. And so right now is still a great time to be able to buy a house if you can afford it. And that's really what it boils down to, is if you can afford it. It is my job as a mortgage loan officer. It is literally written into my federal job description that I am a fiduciary, that it is my fiduciary responsibility. That's such a long word. It is my fiduciary responsibility to ensure that you don't put yourself in a terrible financial situation. I literally, by law, cannot sell you a mortgage or give you a mortgage that puts you in a position that you can't even make your own payments. Like, you can't even pay your own bills. Like, there are caps, there are max limits to debt to income ratios and loan to value ratios. There are caps that prevent what happened back then. So, for those of you that are thinking, 2008 is happening all over again, no, it's not, because it wasn't my industry that caused the economy to collapse. It was a virus that came over from China that spread like wildfire, and now people are sick and unfortunately passing away from it. But it wasn't mortgages that caused this issue. So that alone in itself is why this is not a 2008, 2009. So at the end of the day, after all this rambling and ranting about this industry and my industry and real estate in general, it boils down to, like I said earlier, supply and demand. There are still 70% of people that are employed out there, thankfully, thank God right now, and fortunate enough to have the ability to have a job right now. And one last thing that you probably should consider into this situation is, for those of you that live in the state of Washington, specifically in the metro Seattle metro area, right? So King County, Snohomish County, Pierce County, we kind of essentially have our own little bubble of an economy going on right now for just us. And I say that because we have major companies like Starbucks and Boeing and Microsoft and Amazon and Expedia that employ so many people in this area. And a lot of these companies, majority of these companies, are still business as usual because their people get to work from home and they have the ability to work from home. While it sucks for a lot of people because they don't like working from home, they can still get their jobs done. Therefore, these companies are still able to continue flourishing. And also, a lot of the other startups in this area and a lot of other smaller businesses that have that ability, that have that luxury, can still keep moving forward, can still pump money back into our economy. Now, if all of those companies, or even half of those companies, decided, you know what, we're done, we don't like Washington, we are leaving, we are headed to Texas or wherever, that would then screw our state. Like, that would then screw our economy, and that would then put us in a really bad situation. So please don't leave us. Please don't leave Washington, major companies that keep us afloat, because we really need you. We really do. And we love you. We appreciate you. Seriously, we do. As much as a lot of people piss and moan about it, we do appreciate you. So what does this all boil down to? Well, it basically boils down to the fact that there is still a huge demand for houses and for real estate and for a roof over their head. And there is still a very low-ish supply of inventory. And that's what it's been for the past couple of years in this area. A very low inventory, a very high in demand commodity. And that's why our market is still doing incredibly well. So for those of you that have the ability to be able to purchase a home, and trust me, there are a lot more of you than you probably think that there are, do it. Take advantage of this opportunity. Even if you get a very high interest rate mortgage right now, if you can afford the payment, just know that 6, 12, 18 months down the road, when you are able to refinance that mortgage into a much lower interest rate, you're going to save yourself so much money at that point. If you go from a 5.5% to a 4% interest rate, you're going to save a ton of money. And on top of that, our economy, our housing market is still continually booming. And for those of you that are watching this video, I don't know when I'm going to be able to release this video due to compliance issues, but for those of you guys that are watching this, I'm doing a live Q&A session with a good friend of mine, Kevin Sabora. We're going to be doing a Q&A, a little discussion, fireside chat, you can call it, talking about renting versus buying, especially in today's market. And it's going to be no bull. It's going to be no frills. It's going to get straight to the point and break down the actual pros and cons of the situation as it is right now. So if you are available to watch that video today or tomorrow, I don't know when it's going to be, but at 2 p.m. Pacific Standard Time, April 3rd, Friday, please do come join us and watch the video. And if you weren't able to see it live, definitely check it out on my Facebook, and I'll put the link down below in the description as well. So thank you everyone for listening to me rant about this topic. But like I said, this is not a 2009. And for those of you that think it is a 2009, like, I will be the first person to tell you that you're wrong, because this is not being caused by my industry. Anyway, you guys, thanks so much. Dane the Mortgage Guy here. Check me out online at danethemortgageguy.com and also on Facebook and Instagram at dane.the.mortgage.guy. I will see you guys in the next video. Cheers, everyone. Love you all.